right, everybody, good afternoon. Welcome to today's webinar, How to Swing Trade with Confidence. Thank you guys for joining me today on this gorgeous Wednesday afternoon. At least it's nice down here in the south. Coming at you live from the Charlotte, North Carolina area. So, gorgeous day here today. Just want to do a quick sound check, make sure you guys can all hear me okay. I am streaming live on YouTube as well. So if you are joining me via YouTube or GoToWebinar, just let me know that you can hear me. Just type something in the chat box there. We got a nice little crowd here. I will get started. All right. Well, that's it. Let's get going. My name is Jay. Thank you, John. Appreciate that. You know, when nobody chimes in, it's like, am I talking to myself or can everybody hear me out there? Good. If John can hear me, everybody can hear me. If you can't hear me, then there might be something wrong with your speakers, but I am coming through okay. Fantastic. Again, my name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. Been with the company almost 20 years now, almost 20 years in July. And one of my main roles is our swing trading coach. I'll talk a little bit about that later. But we got a lot to cover today. I really want you guys to stick with me to the end. If you stick with me to the end, I will share with you a copy of today's slides. I think this would be really helpful. You'll also get a recording of today's session a little bit later. You want to go through the recording, you'll have a nice copy of the slides in PDF form that you can review. Okay, just somebody remind me at the end. I sometimes forget. You know, we'll be together for about an hour. And at the very end there, just say, hey, Jerry, don't forget the slides, and I will put them in the handout section of your GoToMeeting control panel. So those of you joining me via GoToMeeting, you see where the chat box is, where you can ask questions. And by the way, any questions you guys have along the way, feel free to ask. I do have Ray Clark. Ray is the Vice President of Educational Services at VectorVest. He is in the background. He'll answer any questions that you guys have along the way. I will as well. I don't generally stop too much throughout the presentation, but if I see something that's pertinent, I'll answer the question. But again, feel free to ask away. But in that interface that you guys are using, your GoToWebinar control panel, you'll see a section that says handouts. It'll say handouts. Right now there's nothing in there, but at the very end of today's session I will plop today's slides in that section for you guys to review later. Okay? I'm really excited to have you here for today's session. Today we are going to discuss continuation chart patterns, specifically ascending and descending triangles. These are two, in my opinion, two of the most powerful tools in a swing trader's arsenal. Okay, but before we dive into the technicals and the setups and how to trade these patterns, I want to start by addressing something that may be holding you guys back from becoming a consistently successful trader. How many of you have ever looked at a chart in hindsight and thought, you know, I knew that was going to happen, but I didn't take the trade? Or maybe you entered a trade with confidence. You loved the setup, you felt really good about it, the market conditions were in your favor, only to second guess yourself and exit too early, watching the stock take off without you. I have been there plenty of times. I know the pain. Or even worse, you found yourself caught in a pattern of inconsistently. You know, some trades work, some don't. Now you're going to have mixed results all the time, right? You're going to have what Dr. David Paul used to call a cluster of losing trades. These are, you know, 2, 3, 4, 5 losing trades in a row. That's going to happen. So some trades are going to work, some don't. But you can't quite put your finger on why you're struggling. The truth is, most traders who struggle with consistency, they're not lacking knowledge, they're lacking structure or a proven system, and of course confidence in executing it. And that's exactly what we're going to work on here today. Okay? Many traders see patterns forming, but hesitate to pull the trigger because they don't fully trust what they're seeing. Some other traders, they might enter trades, but they don't have a structured plan for when to exit. And that only leads to emotional decision making. So a lack of clarity, a lack of understanding how to trade certain setups, with swing trading, it's all about high probability setups. You can use technical indicators, you can use moving averages, you can use support and resistance, things like that, and of course chart patterns. But everything that professional swing traders use, there's a reason for why they use those certain indicators, and there's always a reason and a plan on when to exit the position. Sometimes it's fear of losing that causes you to exit too soon. Right? You might be flat on the trade, maybe a little up, maybe a little down. You don't want to dig yourself too deep into a hole. Maybe you do have an exit plan in mind, but you close too soon. You close before your exit criteria or your exit plan has been achieved. Greed does lead to holding on to trades too long. So there's that balance, right? Always kind of battling those two sins, right? Two deadly sins of investing, fear and greed, to name just a few. So greed will lead you to holding on to trades too long. Impatience makes traders jump in before the pattern is fully formed. So all of these things we're going to work on and focus on here today. Many traders win big, but give it all back in just a few bad trades. It's the worst thing that can happen is you win big on a trade, but you did it for the wrong reasons, or you made the wrong decision and it winded up working out and you made money on it. There's nothing worse than that, because you might make that decision again, and then it's going to probably not end up with the same outcome. So traders win, but they'll give it all back. They either risk, and then what happens too is they'll either risk too much, setting themselves up for emotional pressure, or they risk too little, making it impossible to grow their account. So maybe you'll leverage up on a trade, you buy more shares than you should because you're on a little bit of a winning streak. Okay, you've got a couple of good trades under your belt, and now you're going to kind of push more chips out on the table and over leverage yourself. And look, there's a time to leverage up. There's a time to increase the size of your position, but there needs to be a reason for it. By the end of this session, you'll have a repeatable process, and that's the kind of the optimal words there. Repeatable process that you can apply to your trades immediately, whether you're trading stocks, options, ETFs, it doesn't matter. Okay, so our goal today is to teach you a proven framework for trading triangle patterns. I'm going to help you identify high probability setups with confidence, show you where to enter and where to exit, and how to manage risk effectively. Okay, and then give you the tools to remove hesitation and trade with confidence. Everything that we do there has to be a rhyme or reason to it. Confirmation levels, profit targets, stop losses. Those three form the foundation and kind of the structure or the anatomy of a trade. Okay, you have to have all those in place. A couple of final thoughts before we start. Consistency isn't about being right all the time. You will not be right all the time. It's about having a process that gives you an edge over time. So if you've struggled with inconsistency, this webinar is designed to change that. But knowledge alone won't change it. You need to commit to applying what you learned today. So today, guys, I encourage you to take notes, ask questions, most importantly, take action. Start applying some of these principles to your swing trading right away. And remember, that's what we're going to be discussing here today. This is not a retirement minded webinar, or we're not going to talk about options. This is for the portion of your overall investment capital that you either have or plan to allocate towards this type of trading. chart patterns, technical indicators, moving averages, right? This is a very niche, I would say, type of trading philosophy and trading approach. It's not buy and hold for as long as you can, and maybe trade options on some of those long-term positions. Of course, understanding market timing and market direction. But the objective for a slower, more retirement-minded portfolio is buy and hold as long as you can, as long as your plan is reached. Okay, so we're a little bit more active in what we do. Today we're diving into two of the most powerful chart patterns for swing traders: the ascending and descending triangles. These patterns are commonly used by traders to identify potential breakouts and breakdowns, helping traders enter high probability setups. And by the end of today's session, you'll have a solid understanding on how to trade them effectively. So let's start by defining what these patterns are and how they work. Triangle patterns are continuation or reversal patterns that signal potential breakout opportunities. And the two main types, again, are ascending and descending triangles. An ascending triangle is generally a bullish pattern with rising support and horizontal resistance. A descending triangle is generally a bearish pattern with declining resistance and horizontal support. We'll get into the kind of the psychology, I guess, and what's really going on during these patterns in a moment. But they're used by swing traders to anticipate breakouts and breakdowns. Triangle patterns provide traders with well-defined setups, making them excellent tools for both beginners and experienced traders. All right. I love them so much because they offer clear entry and exit points. If you understand them and learn them, right, there's never a time where you're going to sit there and say, what do I do? When do I take this trade? Or maybe you take it and you're sitting there, what do I do now? When do I take profits? When do I stop? When do I cut my loss? It's all laid out. It's all kind of baked into these patterns. So that, again, they offer entry and exit points, very clearly defined. Also, reliable risk to reward ratios. So when you understand where your profit target is and you know where your stop loss is, generally I like to make more than I stand to lose on a trade, right? If it's a setup where I can make a buck but I might lose two, that's not a high probability reliable setup. So these do offer right side up risk to reward ratios where you stand to make more than you stand to lose. When you're trading these types of patterns and you stand to make more than you can lose more often and still wind up being successful and making money. You can have more losing trades than winning trades, right? For example, let's just say you got a 3-to-1 ratio. I can make $3 on a trade or I can lose a dollar. Well, you can really have 2 losers to every 1 winner and still wind up making some money. Now, if you have 3 losers to every 1 winner, then you're kind of breaking even. But the goal is to we don't have to be right all the time. You don't even have to be right more often than you're not. But just having that solid foundation will go a long way. Okay. So when used correctly, these patterns can greatly improve your consistency. Okay. So why focus on triangle patterns? Reliable chart patterns with well-defined entries and exits provide clear risk to reward setups. They also work across multiple time frames: daily, weekly, hourly, intraday charts as well. Now we're only going to focus on daily charts today, but you can use them to day trade as well. You can use them to invest even longer term. So you might see an ascending triangle on a weekly pattern, a little bit different perspective, and the objective is a little different. Your time frame is a little different, but the psychology behind the pattern is the same. Okay, let's now start with the ascending triangle. This pattern is characterized by a flat resistance level and rising support. So what buyers are doing is they're stepping in at higher prices. they're creating and putting in a series of higher lows, while sellers hold the price down at resistance. Eventually, the buying pressure outweighs the selling pressure, and that leads to a breakout. Okay? We don't trade. This is very important to say and for you to understand. You don't trade these patterns during these consolidation periods where price is consolidating between these two levels. You have to wait for a breakout. And breakout confirmation is when price moves above resistance with a surge in volume. Everything, technical analysis it revolves around two things: price and volume, always. Technical indicators are price-based, moving averages are price-based, support and resistance is price-based. Everything is price and volume. So we wait for a price breakout accompanied by a surge in volume. That is conviction. That tells us that buyers won the battle, and now the stock is likely to continue to move higher. So here's what it looks like. Okay, here's what it looks like. I'm going to see if I can draw. Actually, I've already drawn here. So here's what it looks like. Price just in bars here, right? There's one touch at resistance. There's your second retest at resistance. You guys can see my mouse, right? Let me just make sure you can see it. Actually, let me create, I'll do a laser pointer. How about that? You can see that better? One touch at resistance, two touches at resistance, three touches at resistance, four touches at resistance. So there's obviously selling pressure, right? There's a ton of sellers here at this zone, pushing price lower. At the same time, what's happening is buyers are coming in and they're picking up shares at higher prices and putting in higher and higher lows. You never trade during this time, okay? You wait for the breakout. And I said earlier that ascending triangles generally are bullish patterns where breakouts follow. It's not always 100%. Okay, not always 100%. So that's why we wait for the breakout. I've seen plenty of times where this pattern is formed and then sellers wind up winning and push the price down, and now new lows are put in, and we're going in the opposite direction. Okay, so you wait for the strong breakout above resistance. And it's not on an intraday basis either. It's I wait for the breakout above resistance, and I wait for a strong close and a close above that resistance level. Then confirmation happens the next day, and that's when you take the trade. Okay? There you know that sellers gave up, the bears gave up, buyers as they pushed prices higher and picked up shares at higher prices, they were able to finally push through that resistance level. There is your signal, and there is your confirmation. Okay, we'll look at some real examples in a moment, but that's the setup, and that's the signal, that's the trigger. Now, where you set your stop loss is always at the last higher low that was put in before the breakout. All right, and you draw these lines on the chart. We'll do that when we get into the program. You draw these lines on the chart. Okay. So you know exactly where these higher lows are. You know exactly where resistance is. Okay. Now, that's two of the three components of a structured plan. The third is, where do I set my profit target? I know where my breakout level is. I know where my stop loss level is, but I want to know where I should consider taking profits. So what you do is you measure the distance between resistance and your lower trend line. There's different ways to measure it. I like to kind of split the difference. You can, if you want it to be really ambitious, you can use the fattest part of the triangle where the first higher low was put in. If you want to be really conservative and you're not looking for a huge gain, you can kind of come back into the skinnier area of the chart I like to go right in the middle, kind of split the difference. So I take this price, I subtract it from this price, I take the difference between the two, and I add that to the closing price of the breakout candle, and that is how I set my profit target. So for example, if this resistance level was 30 bucks, and you know right here in this area is 20 bucks, that's a $10 difference. I add $10 to the closing price of the breakout candle, and that is where I would set my profit target. So if, let's say, the closing price of the breakout candle was 32 bucks, then I would have a profit target of 42 bucks. Okay? All right, let me get back to there we go. Okay, so key characteristics: series of higher lows indicating buying pressure, strong resistance acting as a ceiling. I didn't mention this, but this is an important part. Volume declines during the formation and then expands on the breakout. So what does declining or drying up volume mean? It means that there's indecision. There's not a ton of enthusiasm happening during that time period, right? You're not hitting higher highs. You're not hitting higher lows either. It's called consolidation. So during consolidation patterns, this can be triangles, this can be flags, this could be pennants, this could be head and shoulders patterns or inverted head and shoulders patterns. During periods of transition or consolidation, you generally want to see declining volume. And then when again the breakout happens, you want expanding volume. Okay, and again, ascending triangles often lead to bullish breakouts in strong trends. So how do we trade it? The entry, you buy on the breakout above resistance with strong volume. Stop loss is below the last higher low. Your profit target, you measure the triangle's height and project it above the breakout. And volume confirmation, ensure the breakout is strong, right? A lot of times what I'll see too is a breakout intraday, but then a fade to close the session, where you have now this long upper wick on the chart that went above resistance, but now the close of the day is kind of right back in that zone. That's not a strong breakout. Other times I'll see price maybe close above resistance, but on really light volume. That's not a strong signal either. All right, let's hop in. I'll show you guys a couple of examples. DVN and fix. Let's take a look at two of these. Let me set up the chart. Give me a second here, guys. Okay. Clean it up. Let's get rid of some of these indicators. Let's put volume on the bottom. So just recently, what is this? Hard right edge, March 11th. Just recently, what are we seeing? Well, first off, during the beginning stages of this consolidation pattern, look at how volume dried up. Okay? What I love too here is price fell 4 days in a row, and look at how volume dried up each of those 4 days. That told me even earlier that that pullback wasn't very strong and that bullish momentum would likely to continue. But what happened here, let me remove these lines and I'm going to draw these with you guys. Okay, so there is your high, there was your sell-off close near the low of the session. You failed to after this pullback and subsequent rally, we failed again to break above the old high. Had a couple of days pullback again, a little bit of a rally. Once again, failed to break above the old high. So what's happening there is price is establishing a resistance zone. There's what price is that? 45 and change. There's sellers at 45 and change. There's sellers at 45 and change. There's sellers at 45 and change. 3 times here during this time period. At the same time, what's happening? Higher low, higher low, higher low, higher low. So if I'm seeing this in real time, I am just kind of connecting all those price points with an extended line, and I'm saying, okay, well, buyers are coming in, picking up shares here, they're picking up shares there intraday, they're picking up shares there, they're putting in higher lows here. Okay? What we wait for is that. We wait for a strong breakout. Look at the spike in volume that happened on that day. Okay? So a really strong breakout above resistance, and you can see there was a strong close. And watch this. If I change the price from a candlestick to a line, you could see new closing high there. So you can even just do that and say there is true resistance if you wanted just to use the closing prices. Right? Just looking at closing prices, man, almost to the penny there. 45, 45, about 45, 3 times in a row there. Okay, so there's truly our resistance zone as well. I can also add, if I wanted to go to technical analysis, add support and resistance to the chart. I would change my settings a little bit to find this resistance level, but you can do that as well. Okay, I'm going to raise it up just a little bit, kind of split the difference between the highs and the close, and that's my resistance zone there. But clearly, on March 12th, you got a breakout. It happened on expanding volume. I'm ready to enter the trade the next day. The next day, you got confirmation. Price eventually, now I know it didn't open above your confirmation level, but it did go above your confirmation level the next day. By the way, what's our confirmation level? Our confirmation level is the close of the breakout candle. This is very scientific, guys, so I'm hoping you're taking notes and really following along, because it's not just, oh, I'll just enter in whenever I want the next day, or whatever price I see. I'll just take it at the open no matter what. That mindset and thinking has to kind of you have to remove that, eliminate it from your routine, because this is very systematic and scientific. It has to be done the right way. So as of the close of that day, March 12th, I knew that I was going to enter the trade if price went above $46.19 the next day. That is the close of the breakout candle. Did price go above 46.19 the next day? It did. It actually closed at 46.25, winded up hitting a high of 46.41. You take the trade. Everybody clear so far on confirmation? Confirmation, what the pattern looks like, what the breakout looks like, what confirmation looks like. Okay, now where do you set your stop loss? I would set my stop loss right below, just a little bit below, the last higher low of that consolidation period, and it specifically at what price? Right below 43.43, right? That is the last touch, essentially, right? The last kiss, the last retest of this trend line, which connects and touches, the higher lows during this pattern. That is where I would set my initial stop loss, meaning I take the trade on the breakout. If I'm wrong, guys, and the trade goes against me, I have to set a stop loss. You have to have an exit plan on what to do at a loss. Now, the third is, where am I going to set my profit target? Okay, and what I would do is, again, I don't need to come all the way back here, right? Measure that out. I'm not that conservative and careful where I would measure it there. I'd go right in the middle. Right in the middle. Right at that touch. Okay. I take this price at, let's call that 45.50. I take that price at, let's call it 42. So $2.50. $2.50 added to the closing price of the breakout candle, which was 46.19. So 47, 48, close to 49, 48.75 is where I would look to take profits after taking the breakout trade. Let's step through now. Let's see what happened with this one. All right. Price rallied, good. All right. Did we reach our profit target? We did. We got to 48 bucks. Whoops. We got to $49 right away. And you reached your profit target pretty much immediately. Okay? You're not holding on to this trade any longer thinking, well, look at that. It broke out. Look at volume expanding. I'm just going to keep it. You are to take profits on that day, March 19th. You can kind of see what happened that day as well, right? You know, we rallied all the way to 40, almost 50 bucks, 49.83, and then sold off, closing a little bit below the low, the midpoint of the day. You're taking profits. Now, here's a couple of things that you can do. Here's some guidelines. You take profits. You take action. Okay? Why wouldn't you take action, right? You set a profit target. You knew where your profit target was. Why would you not take profits when you reached your profit target, right? So you're following a plan. You're doing this consistently. I said earlier that we're trying to follow a repeatable process. This is a repeatable process. You always have confirmation. You always know where your confirmation level is. You always know what your stop loss is, and you know where your profit target is. Now, stock by stock, it's going to vary, right? Just depending on the setup itself. But those are the three, kind of pillars of your structured plan. If you decide to take profits and not close the whole position, which is an option for you, you could close the whole position and move on. What I like to do is close half. Literally sell half my shares. Book profits and then raise my stop. I'm not leaving my stop down there. I'm raising my stop to my entry price. What does that accomplish? Well, you booked profits. Let's just say you make $1,000 on the trade. You take half off. You book 500 bucks. It leaves you with $500 left. You raise your stop from the initial level to your cost basis. What's the worst that can happen with the balance of the trade? The worst that can happen is price can fall back to your cost basis and you walk away and you close the position at that point. Well, it's a net win for you because you booked profits. Sure, you didn't make any money on the balance. It winded up being a wash, but you booked profits, therefore you won on the trade. Okay? Okay, let's go to the next one. Another ascending triangle example. Great example here. This was back in end of last year. Here's Fix Comfort Systems. No regime. There is no. This is a cherry picking technique. There are no scans in VectorVest to find these types of patterns. I like scans. I use scans a lot. Here at VectorVest we have a few different swing trading courses. We have Trade Like a Pro. We have Mastering Moving Averages. Those courses, they do come with scans, and the techniques taught in those courses we do have scans for. We just don't have them for this, and I think that's okay at times, because part of becoming a consistently successful swing trader is being able to read charts. Okay, so you have to understand these types of patterns, how they're forming, why they're forming. That just going to improve your skills that much more. Again, I love scans, but there's no scans for these. So what do we see here? We're looking at end of last year. All right, so we have new high put in at the end of October, another retest at the beginning of December, another retest, and a couple of other retests here. So this is what I was talking about earlier, where you get this intraday breakout. Price here went to 1,050 bucks there on January 5th, but it closed back down into this resistance zone. So clear resistance at about 1,028, and then higher low after higher low being put in by the bulls. Okay, the bears are trying their hardest to keep price from moving above 1,028 bucks. Okay, doing a pretty good job of it. You could see that low too kiss that trend line as well. Okay, another sell-off, another retracement off of resistance. We are consolidating, guys, right? This is classic consolidation. Okay, not hitting higher highs, not hitting lower lows. You're consolidating, but it is more of a bullish consolidation pattern because higher lows are being put in. There's the breakout. Okay? There's your breakout. So, and it's hard to this big volume bar here really throws off the scale, but you can see how volume really started to pick up a little bit, how it dried up here as price kind of kissed that lower trend line, but then really started to pick up before the breakout. And then again, like if I zoomed in here, you got a pretty good volume day on that day. It's hard to say, but with this big volume bar here, but a good volume day on that day. Okay, so price closes at 1,073. I say, all right, well, here's the breakout. You were patient. You understood what was happening here, that there was a ton of sellers at this level. Buyers were coming in and picking up shares at higher prices. You waited for the breakout. You were patient, and now you're looking for follow through. $1,073.14 is your confirmation level. So if we step forward the next day, 1,043, we got to 1,079 during the day. You took the trade there on that day. Okay, you got confirmation on January 14th. Okay, where would I set my stop loss? Let's see with this one here, right below this area right here, right below that area. I know there was a touch there, and then the rally, and then there was that long lower wick there. There's a couple of higher lows here. I'm going to put it right below there. That would make sense. You could keep it a little tighter and maybe put it a little bit higher. I'm okay with putting it right below that low there, because that was truly the higher swing low as opposed to just the higher price low. So that's a true swing there. Okay, so that's where I would set my stop loss. Where would I set my profit target? Let's go right in the middle here. And what's this price? 1,027. What's this one at the bottom? 870. So 130 plus 27, 160. Let's say 160 bucks is your profit objective. So you add $160 to the closing price of the breakout candle, which was 1,073. So 1,173 to 1,230. Roughly $1,230, $1,233 is your profit target. Let's fast forward here. Did we get there? What did I say? 1,230. What did we get there? We got 1,177. All right, look, we got there. What do we get there? About 1,200 bucks. Let me say this. And Ron does a good job of this when he teaches options. And you know, when you have a profit target in mind, and in options and spread trading, it's this way, where you know how much you can win on the trade, right? You have this max profit. You consider a profit target as your max profit. If you get to 80 to 90% there, don't just let it fall all the way back to your cost basis, right? If you get to 80 or 90% there, look to take action. I don't need to reach 1,230 bucks to the penny before I take profits. It got to 1,200. I would take profits over those next couple of days there that you see on the hard right edge. Okay. All right. Let's get back into, and we'll come back to descending triangles in a moment. All right. This is why I'm going to give you guys the slides later on, because it's going to help you. And we got some examples here. Here's KGC, resistance, 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 higher lows being put in, breakout. A lot of times what you'll see too is when you get a breakout, you might get an immediate retest of that support level. It's now support, right? When price breaks above resistance, it becomes support. So you might get an immediate retest of that support level. If you take the trade on the breakout, and that was your breakout day, and that was your confirmation day, and you see, and remember where we would put our stop loss. We'd put our stop loss right below this higher low here. You take the trade, maybe take a starter position, a smaller position than normal, and then when price retests support, you can add to the position on a successful retracement off of support. You can see here price broke out, retested support a couple of times, but never broke down below it. That's an important thing to point out. Never broke down below this support level and then just completely rallied after that. Okay, and we looked at SNEX there earlier. Here's SNEX. There's resistance, resistance, higher low, higher low, higher low. There's your breakout right there. Okay, there's your breakout, and then in this case it was a pretty immediate retest of support. So if you take the trade on the breakout, your stop loss is here. Your profit target is the difference between the lower trend line and resistance. Okay, and then obviously we reached it. But if you take the trade on the breakout and it doesn't just continue to explode towards your profit target, it retests support, you can add to the trade on the successful retest of support. Okay, let's talk about the descending triangle. I'm going to go through this quickly because it's just kind of the opposite. Here you have a flat level of support. Price finds support at a key level. Okay? But also sellers are gaining control, pushing prices lower, so they're putting in lower highs. Breakdown confirmation is important. Once price breaks support, the pattern typically leads to a significant price drop. Here's what a descending triangle looks like. Okay? Here's your level of support. Generally, you're in a downtrend, right? If this is a continuation pattern and suggests downside continuation, generally you're in a sliding pattern, right? You're in a downtrend. Lower highs are being put in, and at the same time you have a level of support here. So there's buying pressure here, here, and here. And they're selling, and sellers are coming in and pushing price lower, putting in these lower highs. Here we wait for a breakdown below support, and then confirmation before we either take a short position, or if you happen to be long, it's time for you to close your long position. If you take the short position, your stop loss is the last high within the consolidation period. Confirmation is below the close of the breakdown candle. Okay? Measured move is the same. Profit target is the same. I'd measure the distance, right in the middle of the triangle. I'd subtract it now from the closing price of the breakout candle to give me my profit target. Okay? Like the ascending triangle, this pattern has distinct characteristics. A descending triangle features a strong support level that repeatedly holds until sellers eventually overwhelm buyers. Lower highs indicate increasing selling pressure. Volume declines during the formation and then expands on the breakout. So understanding these characteristics allow traders to anticipate price moves more efficiently. The psychology behind these patterns, I think, is fascinating. With an ascending triangle, buyers are in control, creating higher lows as they push the price towards resistance. Eventually, they overpower sellers, leading to a breakout. In a descending triangle, sellers dominate, pushing the price down until buyers can no longer defend support. Throwing in the towel, and then just letting price break down, causing that breakdown. Okay? Understanding these dynamics can help you make just more confident, consistent decisions. Market conditions play a crucial role in the effectiveness of these triangle patterns. So ascending triangles work best in strong uptrends where momentum supports breakouts. So what are we looking for? A confirmed up situation within a confirmed up. MTI above 1. While there's no market, one market timing signal that is to be followed here, if the MTI is above 1 and we're in the middle of a confirmed up any buying opportunity, any primary wave up, any green light during those situations are, ideal conditions to identify these types of breakouts. Descending triangles are more reliable in weak or bearish markets where sellers are in control. So a confirmed down signal, the MTI below 1, okay, and any primary wave down or red light in the price column of the color guard during those situations. You want to look for descending triangles then. Now, what are we looking for now? Well, we're not necessarily, I mean, I know the market's up nicely today, but the MTI is still below 1. We're still in a confirmed down. This is not the ideal condition right now in the market's kind of rallied over the last couple of days to look for either ascending triangles or descending triangle patterns. Okay? But always consider the broader market context before trading these patterns. So for a descending triangle, enter a short position when price breaks below support with strong volume. Your stop loss should be placed above the most recent lower high, and target the projected move by measuring the triangle's height and applying it below the breakdown point. Okay, so here's D.H. Horton. This was just last year, end of 24, beginning of 25. Doesn't matter. It's the pattern, right? That's the most important. So clearly you're in a downtrend, but it does appear that the downtrend is weakening, right? You got lower high, lower high, lower high. I mean, this line right here connects those lower highs perfectly. But as of the hard right edge, February, March, April of 25, we're not seeing lower lows. What would that be considered if we were seeing lower lows? It's just a downtrend, right? Or a descending channel. Here, there are now buyers that are supporting this price. It's hard to say what price that is, but they are coming in and supporting price from falling any further during this time period. You had a retest of the upper trend line here, you had a retest of support, and you had a little bit of a rally here. Okay, you wait for the breakdown. Whoops, let me go into the program real quick. And we have, let me show you here, DHI, and there it was. Okay, there's the pattern we were just looking at. Okay, there's your level of support. So this was the hard right edge on the chart that we were just looking at, the slide. You could see price did not break above, long upper wick that kissed that upper trend line. Another retest of support. Consolidation, boy, is really strong. There's your breakdown. Okay, and then price continued to move a little bit lower after that. Okay, so there was a successful descending triangle breakdown right below support. WDOF, let me go back in there. Again, I always like to, look, I give you guys slides, but I like to go into the program more than anything else. So there's WDOF. Let's look at the chart. And there it is. Whoop, there it is. Okay. So hard right edge. So here's a level of support, right? What's the time frame? September of 24. So it used to be resistance. Price broke above that resistance level, came back down, retested it, rallied, retested it again. This rally was the key here because it failed to take out the old high, and then you got the rip off of it. This retest then of support is also very important because it also stopped at this $8.81 zone. Also, you saw another lower high there. Let's fast forward. Let's kind of play this out. There's another retest, right? Failure. Look at the long upper wicks, right at that trend line, and there's your rip lower. So, if this were the hard right edge, and this is all a part of improving your skills as a chart reader. If this was real time, and I'm looking at this at the end of October, I see a really strong support level here, 1 touch, 2 touches, 3 touches, right? But at the same time, I'm seeing lower highs being put in real time. I'm waiting. I know I'm waiting. I'm seeing yet another retest of support. Man, look at that day. My goodness. You had a lower open and then a run all the way to 10 bucks and then a sell-off here. I don't consider that day, October 31st, a true breakdown. It did not truly, I know volume was big, but it did not truly break down below that lower trend line. There it did. Or I'm sorry, the support level. There it did. And it did so on really strong volume. So you want to take a short position. You can do that on confirmation, and you can see price continued to break down. Here's what happened too. Price broke down below support. Then what happened? Immediate retest. Immediate retest back into that zone. One strong up day though wasn't enough. And then the rip lower. So the continuation that you're seeing there as of the hard right edge was one of or following this descending triangle pattern. Okay, then you had a retest, right? Another retest, and then eventually the trade, went the other way. But there was your breakdown. There was your shorting opportunity to play the breakdown below. And there's how it played out. Okay, let's talk a little bit about false breakouts and how to avoid them. They can be frustrating, but they can be avoided by waiting for a candle to close beyond the breakout or breakdown level. Okay, confirm the move with volume expansion, and you can use other supporting indicators like RSI or even MACD to strengthen your conviction. A breakout above resistance with a rising RSI and a bullish MACD, that's a strong signal. Okay, avoid trading in choppy market conditions where breakouts are less reliable. Risk management is key. Never risk more than 1 to 2% of your account on any one trade. Adjust your stop loss based on ATR. So if ATR, average true range, volatility indicator, okay, if the average true range is 3 times price, then you want to reduce the size of your position. So prioritize quality setups over frequent trades. For example, let me show you guys an example on how I would size. Let's do this one. Let's do fix. This was a recent one, right? There was your breakout. Confirmation was $1,450, No, I'm sorry, no it wasn't. It was 1,073. I know my stop loss was right below that swing low at about 920. 1,073 minus 920 is what? We're talking 80 bucks, 150 bucks. 150 bucks. What I do though is a little something different. Let me show you guys real quick. Come on. This is how I figure out my cost basis. Take out my little trusty percentage calculator and I figure out what the difference or the percentage loss is on this trade. So plug in some numbers here. 1075 and 920. Remember those numbers, 1075 and 920. I need to know the percentage change, the percentage difference between my cost basis or my confirmation level and my stop loss price. I figure that out. That's 14%. So with this particular setup, I stand to lose 14% on the trade, right? I wait for confirmation. If it goes above 1073, if it moves the other way immediately, I get stopped out at about 920, a little bit below that low. We're talking about a 14% loss. You with me? Then what I do is I take my max risk, what did the slide say? The slide said risk no more than 1 to 2% of your overall account, your overall portfolio value on one trade. I'm going to show you guys my current swing trading portfolio. This is my swing trading coaching group portfolio. This is 2026, up about 19% so far. The total value right now, let's round that up, 89,000. 1% of that is $890. 2% is about $1,800. About $1,300 is 1.5%. I like to live right in the middle. Don't risk more than 1 to 2%. I like to, as a rule of thumb, say I'm not going to risk more than 1.5% on any one trade. 1.5% is $1,300. I divide that number by my max percent loss, which is 14%, and that spits out a cost basis of about $9,300. If I wanted to take that trade, my cost basis would have been $9,300. $9,300 cost basis. If I lost 14%, which is my max loss, I would still only lose $1,300, which is 1.5% of the overall portfolio. I solve for my cost basis because I'm using RoboTrader, and that's what RoboTrader takes. It takes your cost basis and then it figures out how many shares you're going to buy. Okay, so that's a little calculation there I like to use. Your risk divided by your max stop loss equals your cost basis. That's how you size the position. This is so important though. Don't risk more than 1 to 2% on any one trade. Scaling in and out, okay, allows you to add to winning trades while scaling out helps secure profits. So in the example of a breakout, an ascending triangle breakout, you take the breakout, but if you get an immediate retest of support, you can add to your position on the retracement off of that support level. Your profit target is reached. What did I say that you can do earlier? I said you can take profits, scale out of the trade, and then raise your stop from its initial level to your cost basis at the very least so that you can't lose on the trade. Okay? So again, enter on the breakout, add on successful retests, and exit at key levels to maximize returns. Exit when price reaches your target, okay? Or if the trend reverses. If market conditions shift, you got to be proactive when managing these. These are short-term trades. They're not long-term investments. You know, we're looking to capture very, very quick gains, and we have to be very diligent and nimble when trends reverse or market conditions change. So never let a winning trade turn into a loss. Stick to your plan. Avoid premature entries. So just some common mistakes to avoid. Avoiding premature entries. Taking trades on intraday breakouts or breakdowns. I've seen too many times where those have failed. Okay? Ignoring volume. You know, maybe you do get a breakout, but it's on really low volume. Okay? It doesn't support the breakout. You trade against the trend. You're not following market conditions. You're not paying attention to VectorVest guidance. Okay? Maybe you're using stop losses that are too tight. All right? And we want to stick to high probability setups. Ascending triangle signals are bullish breakouts. Descending triangle signals bearish breakdowns. Always wait for confirmation, use proper risk management, and stay disciplined in your approach. Okay? And don't settle. Don't settle for, okay setups. Only trade high probability, high quality setups. Be patient and wait for confirmation, and stick to your trading plan. And of course, track your results. You know, the great thing about the genius in VectorVest, or even the RoboTrader, is you can track performance. It keeps a trading log, a trading history. You can go back. You can write notes on the chart, which I do. Draw lines on the chart, which I do, just so you're keeping a log and you know, it's like a football coach or a basketball coach, right? They're always keeping, logs and records of past performance, of past opponents, so they can gain that edge next time they meet. Okay? So we went deep, guys, into how to trade these breakout patterns. You now see how powerful these setups are. But let's be real. Knowing this is one thing. Knowing this strategy is one thing. Executing it consistently, profitably, and with confidence is another. And that's where, most traders fall short. I want to give you all the answers. We only touched today on two patterns, an ascending triangle pattern and a descending triangle pattern. I use a ton more. The performance that I showed you guys in my swing trading coaching group portfolio, I use a lot of different techniques. Chart patterns, continuation patterns are, a few of the different techniques that I use to help grow that portfolio the way you saw it. Okay, so what I want to do is, talk to you guys now about this course that we created. It's called Precision Swing Trading. It's designed to take you from knowing patterns to actually mastering them and trading them, stacking the odds in your favor and building real consistency in your swing trading. This course it's over the course of 6 weeks. The modules that you guys see there, all pre-recorded, however, we are going to do 6 live mastery support sessions. I'll talk about the dates in a moment, who's going to be doing them along with myself, but these are all pre-recorded. We start off with Module 1, the anatomy of a swing trade. Very important. We talk about price and volume structure, risk management, position sizing. We go a little bit deeper on those topics in the first module. Indicators and scans for trending markets and indicators and scans for channeling markets. Not all indicators should be used all the time. You ever try to use moving averages or a MACD in a channeling market, right? They don't work. They're not going to provide you with strong signals. So understanding what market condition, what the market is doing, and then applying the correct indicators to those markets. That's in modules 2 and 3. Then in modules 4 and 5, reversal patterns and continuation patterns. Double tops and bottoms, head and shoulders, inverse head and shoulders. We'll talk more about triangles in module number 5. Rectangles, flags, pennants. Okay, all continuation patterns. They all, by the way, have baked in confirmation levels, profit targets, and stop losses. Nothing that we teach you here, guys, leaves it open-ended, where, okay, here's the pattern and then good luck, right? Here, everything there's a rhyme or reason to everything. And then finally, I love module number 6. This is where we put it all together, okay? We go through the review of how to set up trades, how to execute them, and how to manage them. In this course, it's not just information. It's a complete structured process that helps you finally trade with clarity and confidence. All right? Normally, all the modules that you saw there, the 6 live mastery support sessions, normally $995. Because you joined this webinar, I'm going to offer you folks an exclusive deal. Only available during this webinar and a very short time after that. I think Ray, thank you, Ray. Yep, Ray put the website, guys, that you see at the bottom there, www.vectorvest.com/PST. Only available for a very short period of time, $495. If you're serious about, growing your swing trading account, what do you guys think? 19% this year so far, pretty good. All right, there's been some up and downs in my portfolio. It's up about 19% right now. There's the equity curve, a couple of big, down weeks, but 19% so far this year. Trading continuation patterns, trading reversal patterns, trading technical indicators, and a lot of different other setups. Okay, so if you're serious about leveling up your swing trading, click on that link. Go to that website that you see at the bottom there, www.vectorvest.com/PST. and grab your spot for our upcoming class. Here are the dates for our live mastery support sessions. As soon as you register for this course, you'll be able to get into the university, our VectorVest University, watch all the modules. You can even watch the old mastery sessions. Myself and Steve Chappell. Steve is the Director of Trading Systems Development here at VectorVest. He also leads our Jockey Club sessions every morning, which is a daily trading room for those that have the Derby tool. He and I are your instructors for this course. His portfolio is up 20% this year as well. I don't have that to show you, but we talk every day, and it's a little friendly competition between he and I. He squeaked out a gain last year. He was up 40. I think I made 39%, and we're right there neck and neck together. But here are the dates for the live mastery sessions. Guys, we begin next week. Not a lot of time to think about, what you want to do here. We begin next Wednesday. All of these sessions are at 1 p.m. Eastern Time, and all of those dates that you see there are Wednesdays. Okay? So VectorVest.com/PST. Also, if you don't already have VectorVest 7 Premium, which is our real-time data program, we're going to give it to you. Okay? This is for those of you that don't have Premium already. So you might have VectorVest Basic, you might have Advanced. You're going to get 70 days access to Premium, which includes the Pro Trader, the Auto Timer, and the Watchdog. We are also going to do a live bonus module. This is essentially, I guess you could say, Mastery Session number 7. It's called How to Short Stocks with Confidence. This will be on May 20th, also at 1 p.m. Eastern Time. Okay? Also, I want to let you know that this is a money-back guaranteed course. You go through the entire course, and we know if you do, we can tell if you're watching the modules or not, or joining the mastery sessions, or either watching the recordings. The mastery sessions are recorded. Okay, so you can watch them if you can't join us live. If you're not satisfied, we'll give you your money back. This is completely no risk. You got to do the work though, because if you do, you will see the results. Okay, so go to VectorVest.com/PST. That $495 rate, a very special rate. It includes the 6 modules, the 6 mastery support sessions that we're going to do live, the bonus session, How to Short Stocks with Confidence, and VectorVest 7 again if you don't already have it. Okay? Yes, thank you, Jacob. I appreciate that. So what I'm going to do now, guys, is I'm going to put, where is it? There it is. I'm going to put the slides that I used here in the handout section of your GoToMeeting control panel, and in a moment you'll see it. All right, it's there now. It's a PDF. It says How to Swing Trade with Confidence. Click on that, open it up, download it to your computer so that you have it. Okay, you'll be able to watch the recording, Mike, within 24 hours. You'll probably get the recording later on this evening. I think we always promise within 24 hours, but at some point today, before tomorrow, you should get the recording. I have another webinar later this afternoon, but you should get it at some point. You're welcome. All right, don't forget, guys, click on that link or click on the PDF, How to Swing Trade with Confidence. Open it up. There's your slides. The $495 rate, only available for a very short period of time. We got Good Friday on Friday, right? The market's closed. We're closed. We start next Wednesday. So reserve your seat now, guys. I want to thank you for joining me here today. I had a great time today. I really like delivering this content. I love swing trading and these patterns specifically. Love triangles, love flags, love pennants, love inverted head and shoulders. That's another chart pattern that I really like to trade. They're reversal patterns, not continuation patterns. Bob, the PDF is in your GoToWebinar control panel. It says handouts. It might say something like 1 of 15, but it's a PDF. You should see it. If you got to click on that orange arrow to open it up, it's there. There we go. Thank you. Good. Okay. So Bob says, got it. Thanks. Good. You're welcome, Stephen. All right, guys. Have a great rest of your day. I look forward to working with you. Steve does as well. We tag team this course. He does a couple of mastery sessions. I do some as well. So we start next week. Looking forward to working with you guys and teaching you all about these chart patterns that professional traders really rely on. All right. Have a great day, everybody, and we will see everybody next week. Take care, folks.